Look, let me tell you something straight, and I need you to hear this without getting emotional, without getting defensive, because this isn't YouTube hype, this isn't silver bug fantasy, and this definitely isn't some get-rich-quick commodity talk. This is the uncomfortable truth about silver in America right now, and why big investors, the ones who actually move markets, the ones managing billions, are not rushing in the way YouTube thumbnails want you to believe. Every day you see headlines screaming, "Silver is about to explode." Charts with arrows going to the moon. People telling you this is your last chance before silver hits $100 an ounce, and you sit there thinking, am I missing something? Am I late again? Should I buy now before it's too late? And that fear right there, that anxiety, that urgency mixed with confusion, that's exactly what retail investors feel right before they make a bad decision. Here's the harsh financial reality. Silver is not ignored by big money because they're stupid. It's ignored because it doesn't yet solve their biggest problem, certainty. Big investors don't chase hope. They chase asymmetric clarity, and silver right now lives in a gray zone that makes hedge funds uncomfortable. Let's talk numbers, not emotions. American households in 2026 are still living paycheck to paycheck. Average rent in major cities is eating 30 to 40% of income. Credit card balances are hovering near record highs with interest rates that quietly destroy futures. Student loans are back, retirement accounts are underfunded, and inflation hasn't disappeared. It just stopped screaming and started whispering. In that environment, you would think silver, this so-called inflation hedge, would be the obvious move, right? Wrong, and here's why that assumption is dangerous. Silver sits in a strange identity crisis. It's not pure money like gold, and it's not pure growth like tech. It's a hybrid that requires timing, patience, and narrative alignment. And right now, the narrative isn't strong enough for institutions to bet big. Understand this clearly. Big investors don't buy assets because they are cheap. They buy because they are misunderstood at scale and ready to be re-rated by the system, and silver hasn't hit that moment yet. Yes, industrial demand exists. Solar panels, EVs, electronics, but demand alone doesn't move institutional capital unless it's paired with pricing power and supply shock that cannot be substituted, and silver still struggles there. Every time silver spikes, supply responds, recycling increases, miners hedge production, and price momentum durations. And big money hates assets where upside excitement dies the moment price rises. Now pause. Pattern interrupt. Ask yourself honestly, why do you want silver? Is it because you understand its macro positioning, or because you're tired of being broke, tired of missing runs, tired of watching others win while you stay stuck? Because those are two very different reasons, and one of them leads to discipline while the other leads to regret. The uncomfortable truth is this. Most retail investors look at silver as salvation, not as a strategic allocation, and big investors can smell that desperation from miles away. Look at how institutions behave. They scale into assets when volatility compresses, when narratives are boring, when retail has lost interest, not when YouTube is screaming. Silver still excites too many people for the wrong reasons, and that alone keeps big money cautious. And here's another hard pill. Silver is cheap relative to gold, but cheap does not mean undervalued in a market that prioritizes liquidity, derivatives depth, and global reserve trust. Gold has central banks, silver does not. Gold has monetary history. Silver has industrial narratives that change every cycle. When big investors think safe, and they don't think silver first. They think treasury curves, dollar positioning, gold exposure, and selective equities with pricing power. Silver sits lower on the hierarchy, not because it's useless, but because it requires more perfect conditions to work. Imagine this visually. Big investors are standing at the edge of the pool, watching silver swim in circles. Not drowning, not sprinting, just moving. And they're asking one question. What changes the speed? And right now, the answer isn't clear enough. Inflation expectations are unstable, rate cuts are talked about but not trusted. Recession fears come and go, and without a clean macro trigger, silver stays in limbo. Meanwhile, retail keeps buying on emotion, stacking coins, chasing breakouts, and then panicking when price stalls, which adds noise and volatility that further scares institutions away. Here's the guilt trigger you need to feel. Every time you chase silver because you're afraid of missing out, you become the exit liquidity for someone smarter and more patient than you. That's not an insult. That's a market fact. Pride moment. This doesn't mean silver is dead, it means you still have time to think like an alpha, not like a crowd. Alpha money waits while beta money reacts. Alpha money asks, what has to happen for this to work? While beta money asks, what if it explodes tomorrow? And those two questions separate wealth builders from lifelong grinders. Let me hit you with another harsh truth. If silver doubled tomorrow, most people watching this still wouldn't be rich, because position size, timing, and emotional discipline matter more than price fantasies. Big investors know this, which is why they don't rush. They test, they probe, they watch correlations. They wait for confirmation that retail cannot see. And right now, confirmation is missing. The dollar isn't collapsing. Real yields aren't decisively negative. Industrial demand growth is steady but not explosive. And speculative leverage in silver futures isn't aligned for a sustained institutional run. That's why the smart money is watching, not buying aggressively. Now here's where curiosity should kick in. If big investors aren't rushing in yet, what are they waiting for exactly? What signal flips silver from ignored to unavoidable? What moment forces institutions to say we can't stay out anymore? Because that moment will not feel comfortable. It will feel scary. It will feel late. And most people won't be psychologically ready for it. And this is where your transformation begins. Not by buying silver blindly, but by understanding its role, its timing, and its traps. Stop thinking like someone trying to escape their financial stress overnight and start thinking like someone positioning for a structural shift. Silver rewards patience and punishes impatience harder than almost any asset. If you can't sit through boredom, you don't deserve the upside. If you can't hold through doubt, you will sell right before it matters. Big investors know this about retail, which is why they wait until the weak hands exhaust themselves. Right now, we are still in that exhaustion phase. People are talking, speculating, hoping, arguing. Markets don't reward that phase, they exploit it. But don't misunderstand me. This isn't a warning to avoid silver, it's a warning to stop romanticizing it. Silver is a tool, not a savior. And in the next phase, when conditions align, when narratives shift from hype to necessity, when macro pressure forces capital to move instead of speculate, silver will not ask for permission. It will move fast and violently, leaving emotional investors frozen. The real question is whether you'll still be watching headlines when that happens, or whether you'll already understand the signals before the crowd wakes up. Because in the next part, I'm going to break down exactly what big investors are waiting for, the specific triggers they track, and how someone with discipline, not hype, positions before the rush begins. And if you missed that, you'll be right back here, months from now, asking the same question again, wondering why you always feel late.